Guys, Martha Mentor here, back with another video. All right, in this video, I want to show you a simple formula on deducting taxes weekly, bi-weekly, however you guys get your settlements or however you guys do your books. One of the issues that a lot of people have, I see a lot of people have, is one, they don't know how to pay themselves. I'm covering that on an upcoming live stream or a recent live stream prior to this video coming out, depending on if I drop this video before or after that live stream. And then another issue that I see is, and that is kind of current because it is tax season, a lot of people have been hitting me up in tax trouble. They don't have the funds. They don't know how to go about it. But, you know, this is something that you should be keeping up with, you know, throughout the year. You know, when I talk to people and I ask them their expenses, not one person since I've been on YouTube, when I asked them to tell me or break down their expenses, not a single person has ever said, oh yeah, taxes. Not one person, which is, I can understand why now so many people are DMing me about, you know, taxes. You know, one, don't have the money, all right, which kind of coincides with also, you know, paying themselves. A lot of people, I always talk about how they rob from the sustainability of their business because they don't understand cash flow versus net profit. They think it's the same, or after they pay all their expenses, they think the money that's left over is what's owed to them. And that's just not the case. So let me show you a quick formula on how you should pay your taxes, and how you should deduct your taxes. If you need to set up a separate bank account just to hold your tax money in so you have that money when it's time to pay your quarterly taxes, then you might need to do that too. But Uncle Sam, the IRS, is not someone that you want to play with. So I suggest that, you know, you pay your taxes however you need to do it, to put that money to the side so you don't touch it is what you need to do. We're not going to make this video long. We're going to get straight into it. So let me pull up my example. I actually used this example in this upcoming or previous live stream as far as the figures. So I'm going to reuse these figures again for, you know, to show you how to do your taxes. And let's get into that now. You should deduct your taxes. All right. So we're going to go with a $5,000 gross. All right, so this owner operator, let's say he earned $5,000 for that week. All right, about 75% of that went out in expenses. All right, so about $3,750 went out in expenses. He has a $1,250 balance remaining in the green as far as what you or most people would think would be their profit, which is wrong. All right, I'm not gonna go into paying yourself. We're gonna add another $416 for payment. All right, which brings the expenses up to $4,166.25, leaving a balance of $833.75. Now that's a balance that is net balance with all expenses paid. All right, minus taxes. All right, minus taxes. All right. So now what the rule of thumb is, 25 to 30%. I say do 33%. I say do a third. Always make sure you cover your bases. If there's any money left over, you know, then that just goes to your positive cash flow. All right, at the end of the year or at the end of the quarter. All right, so do 33% after you pay your expenses, right? And then you pay yourself, right? Whatever that balance is, you want to deduct 33% from that. So 33% from $833.75 would be $275.13 you would set aside, right, for the IRS, Uncle Sam, which would leave that owner operator with $558.61 net profit, which is about 11%, which would leave that owner operator cash flow positive for the week. All right, so let's go over this again. All right, and you can use this formula if you have to come back and replay or pause this video. That's fine. You're going to take your gross for the week, whatever your gross is. You're going to fill that number in there, whatever you gross for the week. Whatever your expenses are for the week, you need to have some type of accounting, whether you're doing it manually or you have an app that, you know, you're inputting numbers in throughout the week. You need to make sure you keep up with that. All your expenses, you're going to deduct from your gross. All right. All right, that's going to leave a balance. All right. Now, from that balance, rule of thumb, like I'm speaking in this live stream, previous or upcoming, you want to pretty much pay yourself about a third of that balance. All right. Once you pay yourself a third of that balance, all right, you're going to pay yourself that, and you're going to add that to the previous expenses, which is going to bring your expenses up even higher, right? The reason why you do that is because you pay yourself last. As an owner operator, you always want to pay everything else, see what's left, then pay yourself. Rule of thumb is a third. Pay yourself last, right? And then add that to the previous expenses, because that paying yourself is part of your payroll, which is a taxable event, all right? And then whatever that balance is, you want to tax and set aside about 33% of that, 33%. All right. They say 25 to 30, but I always do a third of that, 33%. So 33% of that number. 33% of $833.75 would be $275.13, which would leave your net profit margin of $558.61. Now, from that 33%, that $275.13 that you deducted, if you're good with managing money and you know your account is always going to stay cash flow positive, then that's on you. But if you're not good with money, or your account fluctuates from cash flow positive to cash flow negative, and you haven't found your business, you haven't found that sustainability in your business, you're still trying to figure things out, things are going on, whatever the situation may be, you may want to create a separate account, all right, a separate business account specifically for your taxes. So every week you're deducting that 33% out, and you're sending that money over into that tax business account. So when your quarterly taxes are due up, you have that money to send to IRS, to Uncle Sam, and that's one less thing you got to worry about. So you're not running around like a chicken with your head cut off when it's tax time, and because you don't have the money to pay the taxes, because you've been paying yourself with that, robbing from the sustainability of your business, and also forgetting that you got to pay our Uncle Sam. All right. So these are things, guys, that, I want to keep reiterating with you. And sometimes I gotta, I gotta break things down, and simplify certain things. All right. So that some people can understand and get it. I never covered taxes before. I just assumed that people would do this, but now I see that they're not. And not only that they're not, they don't know how to do it. They don't have a formula. I understand that a lot of people do not pay CPAs to handle their business, and they do it on their own. So here's a simple formula for you guys to do it on your own. www.boxtrailcourses.com for your one-on-one mentorship with me, Mark the Mentor. Follow me on Instagram, follow me on Facebook. Hit that subscribe button, hit that like button, hit that notification bell so you can stay up to date with all the upcoming videos. And I'm out.